Hello friends, this is Vishal Thakkar again. This time we are meeting with an interesting topic called shares. Shares is a lot of buzzword going around in the market these days that I have bought so and so shares and I made a lot of money. So listening to my friend's advice, I bought some popular shares of a company called Reliance. Now when I bought the shares, I was very happy because the definition of shares told me that I become the owner of the enterprise. Part owner, that is. So then we went out with friends on an outing. So we stopped by at the petrol pump which was owned and managed by Reliance, and we filled petrol. So then the attendant came and said, you filled petrol so you pay money. I said, excuse me, I am the owner of the company because I have got shares of Reliance. So I won't pay. Why should I pay? Owners don't pay, right? It's my petrol pump now. So he said, stop kidding early in the morning. If you have filled the petrol, please pay up. I said, look boss, you can't just ask me to pay. I am the owner, I am the shareholder. He said, you won't understand like this. Let me get my manager. So he got his manager and his manager came in and he said, what happened? What's the matter? If you filled in petrol, you got to pay. I said, look boss, I am the shareholder of Reliance and the definition of shareholder says that whoever buys equity shares of any company becomes a part owner. So how can you ask me for money? I will not pay money because I am the owner. No sir, that's not true. Who told you all this? If you buy petrol, you have to pay money. No, I won't pay money. If you buy petrol, you have no choice but to pay money. Look Mr. Manager, if the CEO of your company comes here, would you charge him for petrol? Certainly not. Then how can you charge me? I am the owner, I am the shareholder, I have shares of your company. Look Mr. Whoever you are, understand one thing. If the CEO comes, apart from being the shareholder, he is also the employee of the company. And as per his salary package, he is entitled to car and petrol. So I won't charge him. Are you an employee of our company? I said no. Then you have to pay. Okay, you mean you charge the owners? Of course we charge the owners. Just because you are the shareholder, you don't get to run the company. So take care next time. Just by buying shares, you don't own the company per se. You just own a part of risk and reward of being the owner. And you can cease to become the owner the day you sell your shares. Is that clear? Okay, thank you so much. So after that conversation with the manager, I did some research on equity shares. What I understood is that if you buy shares, you are becoming a part owner, yes. But you don't get to run the company, or you cannot own the products and services and assets of the company. What I learned from this incident was that by becoming a shareholder, you become a part of an owner's package, whereby you take risk on the enterprise as an owner, and for taking that risk, you are rewarded. How? In two ways. One, you get dividend when the company performs very well and the management decides to pay. Second, if the company is doing very well in the market, the price of the shares will go up and the appreciation, you can materialize that appreciation when you sell those shares. So that's little bit about equity shares today. And one last thing, if you are still wondering why the prices of shares go up and down so frequently, so radically and so fast, let me tell you, in the short run, on a day-to-day basis, it's more like demand and supply. You know why vegetable prices go up and down? For the same reason share prices go up and down. But in the long run, if you hold the shares for more number of years, the increase in share price in the long run is positively correlated with the performance of the company. And most people, they sell off the shares for two reasons. Either they are not happy with the performance that the company is giving, or the performance is so well that they want to materialize the wealth so generated from the increase in price of shares. If you wish to learn more about shares and how to become wealthy by buying and selling shares, subscribe to our channel, Finance Tube. Let me explain. The basic difference between flat rate of interest and reducing rate of interest is that if you borrow 100,000 where you can repay it in 10 months, then the interest on 100,000 would be charged only for the first month, and then on 90,000 for the second, and 80,000 for the third month, and so on.